Hey everybody, it is Brian Shannon here from AlphaTrends.net. Today is Friday. It's the 6th day of July, and hopefully you had a good week. The market did. It was up 1.5% for the S&P. A lot of that gain came coming yesterday and today. Nasdaq was up 2.5%. Russell 2000 close to 3%. Biotech's up 6%. Only oil lost a little bit of ground, and that's of course a pullback within a primary uptrend. So let's take a look at the charts and make some sense of it. The S&P 500, we've been looking at this market as just in a consolidative mode below the volume weighted average price from this gap lower on the 17th. And you can see that we definitively got back above that today. We also made a higher high above our rising 5-day moving average and got back above this prior support, which had been acting as resistance here just recently. Not perfectly, but that basic zone had been acting as resistance. Today we sliced right through it, and we are back above the rising 20-day moving average as well. So the market pulled back and was consolidating. It was holding above the volume weighted average price off the year-to-date low and or the low for this year, and now it seems as though the buyers are going to be able to maintain control as long as it can stay above the 273.50, 274 level. These lines I had drawn in on Thursday, hoping that maybe we could see that happen. But of course, we continue to just slice right through that upper area of prior resistance. And the volume weighted average price off of the low for this month, that will probably come into play over the next couple weeks as well. But for now, again, you have to be impressed that the buyers have regained control. Skeptics will say, but it was on lighter volume. But again, only price pays. Forget about the volume, for 1 day or 2 days. What we're more interested in is where are we in relation to the high over here that we had seen and the from that gap lower. Buyers have regained control, and now this is our band of support that we need to see hold. As long as we're above this, the intermediate term trend is in us until proven guilty. And same is true for the Nasdaq. As long as we remain above 173, 173 and a half, then this market is also innocent until proven guilty. We found buyers at the rising 50-day moving average, and now we are back in control by the buyers. The volume weighted average price off the peak, you can see we're back above that. So you have to give the benefit of the doubt to the buyers. The Russell 2000 also back above the volume weighted average price from the highest point ever paid, meaning the average person who participated even as the market made new all-time highs is feeling good about those purchases because they're in a winning position, and that means that there's really no aggressive short sellers to take control in here. This market came down to the rising 50-day moving average and is experiencing quite a powerful bounce. The semiconductors finally made it back up above their year-to-date volume weighted average price after closing below that for the last week and a half or so. This market is still, I think, overall just kind of more in a consolidative mode in here. I don't view it as bullish as, for instance, the Russell 2000, or even the Nasdaq. But semiconductors do remain resilient. They are holding right now above a 40-week moving average on a closing basis. So that's a positive for this market. Skeptics will say that this is a shoulder, a head, and a shoulder, and maybe it's going to create another shoulder. But the point is, right now we have indecision on the intermediate term time frame. It's not in alignment with the longer term uptrend, so it tells us to look at this market with a little bit of skepticism. The volume weighted average price off this peak is a potential level for resistance. That's also where we saw some support over here. So if you're along, just be aware 106 might be an area where some supply is released to the market that slows it down. You could draw a trend line off of here, and that would actually come up near about 107. But if it was to take maybe 3 or 4 days, that trend line might meet it some point next week. The analysis you want to do is always anticipatory. Financials continue to be a kind of a drag on the market, but they're not breaking down. They're holding at this level of support. And the potential scenario is it's either going to break down and continue lower, or it's going to suck in short sellers here and then rally up, maybe up to the declining 50-day moving average. I don't see a lot of upside in the financials. The average price paid for in the XLF this year is this purple line. That's the year-to-date volume weighted average price. So I think you look at the 27.5 to 28 as a potential area of supply. And as I noted, we've got the 50-day moving average crossed down through the 200. I don't think that's a timing system, but it is showing indecision amongst different time frames. Energy had more kind of sideways action in here. It seems as though energy should get going. In fact, this week I put on Twitter MRO and this chart versus WPX, and WPX actually so far is the stronger stock. But the point was that they're both oil and gas exploration production companies. Here's a weekly chart of WPX. Here's a weekly chart of MRO. I like the MRO chart better, but so far MRO is lagging a little bit behind. I'd say continue to keep an eye on these energy names. They can be choppy trading stocks, but they do look poised to get going. I've been talking about NOV, which is a super choppy stock, but it's been getting going here. So if you look at the 30-minute time frame, this type of action is not the type of action that I like to see in a stock that I trade. I like them not to have all these gaps higher and lower. To me, that's too frustrating. The personality of this stock doesn't suit me. But when you look at the personality of MRO, kind of the same thing, and then WPX, they're just choppy names. So it's something you have to be aware of, and the way you control the risk of that is through smaller share size and, of course, always having your stops in place. Apple looks like it's back on track here a little bit. It pulled back down to the volume weighted average price from this low. And now when we take a look at a 130-minute chart, there's a 50-day moving average. And what we can see here is that the volume weighted average price off the peak, we're getting back above as well. So what this means basically is, as it was below that volume weighted average price, it said there were profit takers. The 50-day moving average showed us that there were buyers trying to defend in there. And now when we look at the volume weighted average price off the low, I think you look at that and say the buyers have been regaining control, and today getting back up above this level. And now if it can hold above this area, I think that Apple is likely to be able to continue to move to new all-time highs as well.